This lecture is going to be talking about business skills for chemists. There's three definitions that we want to know for pricing and money-based things for chemists. So the start is cost, and that's how much does it cost you to manufacture or make. Then there's the price, which is how much you are selling the product for. And then there's the value, which is how much the customer is prepared to pay for it. And the value depends on each customer's situation. So for example, we're going to look at the crude oil situation. The example is, we, who are the seller, have bought 10,000 barrels of crude oil at $90 per barrel, which costs $900,000 in total. And not being a specialist company, a 5 to 10% acceptable profit, which means there's 50 to 100k there or thereabouts, which means we should sell at about $95 to $100 per barrel. So we've got buyer 1, 2 and 3. Buyer 1's a commodity trader who knows the current value of oil is $100 per barrel, so he'll buy for $100 per barrel. But it's going to cost him $1 million, so we'll be making $100,000. But his profit, so our profit would be $100,000, but the trader can't get the money until tomorrow. That's the unfortunate part. So if this was the case and this was the only option, we could take a deposit, we could negotiate a percentage of his profits, depending on how long it takes for him to get the money to us, etc. Then we've got buyer 2, who values the barrels at $200 per barrel, which will give a total value for the barrels of $2 million. However, we'll have to pay costs for refinery, which is 10% in refinery and 5% for marketing, and 10% for market value, which will be an extra total cost of $500,000. Meaning it will cost us $1.5 million. Meaning that we'll have to take $500,000 off that value. So essentially, they'll buy it for $1.5 million. Just narrowing our profit a little bit, we'll still make a tasty amount of profit. And then finally, there's the sheikh, who 10,000 barrels of oil is nothing to him because he can just dig out the ground for $30. So he won't buy. So at this point, we sell to the oil refinery because it gives us the largest profit. There's room for negotiation and they've got the money straight away. But just before the sale of the oil, we find that it's aviation fuel rather than actual just crude oil. So if we go back to buy 2, they sell aviation fuel at $140 per barrel, but it costs them $20 in tax per barrel. So that would give us a value of 1.4 million, but the cost would be 200,000, which would be $20 times 10,000 barrels, plus the million, which means the barrels bought for $100, therefore 200,000 profit. That's what we're assuming. So the 1 million is for 10,000 barrels bought at $100, essentially. Buyer 1 is the commodity trader. He won't pay more than $100 per barrel. It costs him 1 million for the barrels. Our profit will only be 100,000. His profit at 140 dollars for a barrel would be 400k. And then finally, the sheikh has a jet needing aviation fuel, and he knows it's $140 per barrel. He buys it at $130 per barrel. So the sheikh saves 100k in total, and our profit is 400k, which is excellent. So in summary, the customers are buying the perceived benefits of the product, not the product themselves. So we need to understand the buyer, seller, and product's criteria. So now we're looking at the basics of a business. So we've got a lot of definitions coming up. We've got accountancy, which is the financial statements. The assets, which is the economic resources owned or controlled by the business, which can make cash. We've got liabilities, which are services owed by a business. Capital and reserve, which are funds put into a business via shareholders or owners retained on their behalf. We've got a gross profit, which is the sales revenue, which is all the income minus the costs of making the product. And we've got a net profit, which is the gross product minus all costs, minus the manufacturer, sales, operating costs, taxes, everything else included. You'll get a profit or loss statement, which is essentially like a bank statement. And it's part of the past. It will cover the past. And this basically shows the profit or loss, which is basically the profit minus the loss, which will also equal the total income and also the total expenditure. A profit or loss will be determined by the total income minus the total expenditure. A cash flow forecast will determine the future. This describes the short-term cash requirements of a business to ensure the future availability of a suitable quantity of liquid cash, which is cash that you can use. So liquid cash is available cash, like what I said, and it's cash in the bank and short-term investments from just obviously loans or short-term debts can be included in this as well, which are bills and payroll. These are important as investors will look at these, and cash is king. Without cash, your business can't operate. That's a key statement there. So storable goods need to be included when purchased, but once purchased, it won't be on the sheets. So here's some examples, and we have to determine whether it's an asset, a liability, or a capital and reserve. So freehold of the lab is a fixed asset. Equipment used in the lab is a fixed asset. Business fixtures and fittings is an asset. Amount owed, meaning it's a liability. The stocks of chemicals and the stock of sellable chemicals are both variable assets because these can change. The loan from the bank is a liability. Venture capitalist investment is a liability because the capital will want to make the money back on the investment. Cash in the bank is a variable asset. This will change as you're making things. And then there's capital invested by the owner and accumulated profit, which is capital and reserve. These are things that we've got. So we need to have a balance in money between assets versus liability and capital reserves, meaning that the assets need to be equal to the liability and reserves and capital reserves. Many businesses make a profit but fail because they run out of cash, essentially. And next lecture we're going to move on to modern manufacturing techniques.